Hello friends. Today I want to make a video to follow up on one I made a few days ago that was pretty widely watched, and so I want to follow up on it. And that video was about how to trade in a choppy market. Now you're looking at my chart of the E-mini, and this is a 3-minute candle, 3-minute chart. There are 4 points between each horizontal line on the chart. And so this is Thursday, and of course you're seeing the whole day, but let me take you back to the beginning of the day on Thursday, June 23rd at 9:30. And at 9:30, the market opened right over here at 43.98, okay? Right over here, right where my cursor is, 43.98. Now remember, we can see the action on the left side of the cursor. We can't see what happens the rest of the day. We're right at 9:30. And so if the day is going to be choppy, we want to know how to handle it. And is there any way to do it other than looking at price action? Well, number one, everyone has their method of looking at price action, and that's a critically important way to study the market. And of course, everyone has their own favorite indicators. I use only the stochastic indicator because I want to keep my attention mostly on the price action, because the prices are going to tell us where the market is going to go. Or are they? On a choppy day, and we always have to assume it's going to be a choppy day. If we look at these candles as they develop, and remember, there are 4 points between each horizontal line on this chart. Looking at these candles, the average candle, 3-minute candles mind you, the average candle is 4 to 6 points. Now, certainly, if the candle is going to trade within a 4 to 6 point range, we can scalp that, and scalpers have a pretty good sense, if they're good at it, of where to buy at the bottom of the candle and where to hop off a moment later or a couple of minutes later at the top of the candle. Again, these are 3-minute candles. You might trade shorter time frame, or you might trade a longer time frame. But looking at these candles, the market opened at 43.98 on Thursday, June 23rd. So how can we improve our chances of trading, and assuming it's going to be a choppy day? Most days are choppy, we all know this. So one of the things that you should do is to mark the previous day's close on your chart, because the previous day's close is an area of equilibrium. Now, why do I say that? Typically, the closing price of the day is the price where buyers and sellers agree that value exists for each. Buyers feel that they are getting value. Sellers feel that they got value. So the last price of the day, the closing price, is an important price. And we should mark that, or you should mark that on your chart. And I've done it on this chart. And here it is. This was the close on Wednesday, June 22nd. So this was a target. It's an important line. Regardless of whether the market is going to be choppy or not, it's a target, and prices typically reach these targets. Now again, the market opened right over here. I have my cursor at 9:30 at 43.98. Right there is where the market opened. And as we can see, prices rode up to the closed the gap. This is called a gap. Prices closed this gap from 43.98 to 44.09. So 11 points. Okay, not bad. 11 points is good. But do we have any more information that we can use to help us trade in choppy markets? Well, certainly you can look at the momentum and determine whether the price is going to carry through a particular target level, the target here being 44.09. And we can see prices did carry through, but mind you, prices over here just a few minutes before that, actually, these are 3-minute candles, 12 minutes before prices broke through the gap, they did halt right at the target. So this 11-point trade was a pretty good trade, a high probability trade. As much as a high probability as we can consider a trade to be high probability. A gap trade is probably the highest probability. We can we can find on a given trading day. But there are other things that we can use to help us trade during choppy days. Well, I use the Taylor trading technique. Now, George Taylor developed a method of measuring how markets move, and he determined these numbers, these calculations 75 years ago, and they prove accurate on virtually every market. And the reason they do is because they measure the rise and fall over periods of time, and all markets rise and fall over periods of time. So these numbers tend to even out. They tend to average out. And so George Taylor developed these numbers, these calculations. And you can get these calculations and put them on your chart and use them to help trade during a choppy market. And I'm going to put my Taylor rectangle trading zone, let's call it, I call it a trading zone, on my chart. Now this is the Taylor calculations for Thursday, June 23rd, with support down at 43.95 and resistance up here at 44.26. Okay, so we have a 31-point price range calculated for the day. Now, do we know it's going to trade 31 points? No. At 9:30, we only know that the gap exists at 44.09. And we also know where the prices open up, right over here at 43.98. So this is all we know, but we can also use Taylor to give us additional information. Now, Taylor gives us a trading range. The prices are not always going to trade within the trading range, but again, let's look at Taylor and assume, let's make another assumption that the Taylor calculator is accurate for the day, where prices are going to trade throughout the trading range. So what we can do is say, well, if the prices start at one end, they should go to the other end, okay? And on Thursday, June 23rd, it was absolutely as predicted, as forecast. But it doesn't happen like this all the time. But we can fine-tune Taylor to trade, to match to help us trade during the chop. And here's how you can do it. You can draw a line, a trend line, from the one end of Taylor diagonally to the other end of Taylor. And we can determine levels where prices will hit this target. This is an artificial target that's established within Taylor's trading zone. It's a good way to trade. And as you can see on Friday, June 23rd, prices, you could trade this. You can see where this line represented a fairly accurate level of support or resistance. So we could trade Taylor and we could trade the gap. So pretty good. Oh, and of course, you also know your trading setups, because there are only 6 trading setups, and I only teach these 6 trading setups: gap, support and resistance, trend, time and price, momentum, and candlestick. Okay. For example, this was a time and price trade right over here. Okay, here's one leg, equilibrium, the other leg, time and price trade. I won't go through it. It's in my course if you care to take my course at timelessdollar.com. Let's move on to another day, to the next day, Friday, June 24th. So I'm going to move over to Friday, June 24th, and I have my Taylor trading zone set up, and I have my previous day's close. Now here's where the market closed, 44.23 on Thursday. And so on Friday, I put this horizontal line indicating where Thursday's close was. Okay, and it's a target. Prices opened on Friday right over here at 43.85. Now, they're far from the equilibrium, from the gap, from the target, from the close of the previous day. So is it unlikely that they're going to close that gap? It's very likely they will close the gap, just because it's far away, and just because, as you can see, it didn't come anywhere near, doesn't mean it can't possibly happen. So always put this previous day's close, this horizontal line, on your chart. But again, we're talking about how to trade the chop. And so if you have Taylor, and I put Taylor on my chart, and as it turned out, prices traded or opened right at the bottom of the Taylor trading zone. So we can assume that the prices are going to trade throughout the Taylor trading zone, from support down at the bottom to resistance at the top up here at 44.15. But it doesn't mean they will, and as you can see, they didn't. But we can also use the same technique to help us trade this chop, or the chop that is inevitable. We can take our chart tools, and draw a line from one end of the trading zone to the other. And as we can see, this also gives us a line of support and resistance that we can use throughout the day to trade this chop. And so these are tools that we can use to help us get a little better handle on the market, improve our trading, sharpen our trading techniques, and hopefully you learn something from this video. By the way, if you want to use the Taylor trading technique on your chart, there's a book, The Taylor Trading Technique. You can get it on Amazon. But I caution you, it's very difficult to read. George Taylor might have been a genius when it came to figuring out the markets. He was a horrible writer, and the book is almost impossible to comprehend. It took me a long time to develop the calculations and put it into a usable format, and I've done that here in the form of an Excel spreadsheet. There are a dozen calculations that go into it, and they synthesize down to two numbers, and these numbers are in the columns that you see. Each row on this chart represents one trading day, and the rows in yellow are the support and resistance. And you can use this. You can get it at my site at timelessdollar.com, or you can read George Taylor's book, figure it out on your own. Not easy to figure out, but very, very helpful, as you've seen in this video. Also, you can get it. Now let me show you on my site if you want to get it. I told you can get it on my site. And right here, let me get this. Okay, you can find the Taylor Trading Technique. There's a banner that you should see at the bottom, or right here on the nav bar, the drop-down Taylor calculator. Now, by the way, my friends, I'm going to be starting a trading chat room beginning on Monday, June 26th, and you're all invited. I'd love to see you there. We're going to be trading in real time. I'm going to be hosting it from 9 in the morning to 11, and again from 2:30 to 4. Midday, I take a break. The chat room is open. You can use it to chat with fellow traders and share your thoughts and trading techniques. So that's my video today. Thanks so much for watching. Trade safely. Use lots of patience. I'll see you in my next video, and hopefully in the chat room. Have a great weekend.